Mavericks. This is Rob Reinhold. It is the Currency Room. We are now entering into Thanksgiving week. I'm joined by Mr. Ankit Sharma, and I know, Ankit, you already had your Thanksgiving up in Canada. So what do you do this week?
That's a good question. I mean, I guess I'll be double dipping in the holiday here. So no turkey for us, but it will be just doing nothing, I guess. Nothing special here.
I talked to one of our traders up in Alberta, and they said that they celebrate Steaksgiving, where they do steaks this week. So I like that tradition quite a bit. Let's jump into the market. This was not a great week in the market, really, for anything when you take a look at the moves that we've seen lately versus the moves we've seen last week. So equities, we got a little bit of a pullback, but mostly we'll look at the charts. They pretty much just stayed in a range. We saw a couple of things happen. Yields rose. Now, the biggest reasons yields rose was that in the United States, Fed President Bullard came out and gave a speech, and he was much more hawkish. And he actually said that rates still need to go much higher to be restrictive, and he said somewhere in the 5 to 7% range. That is way higher than the market is expecting. The market is expecting like 4.5, 4.75, and he's talking about 5 to 7%. So that did put some pressure on everything. Yields rose. Now, we did get a very good report from the US about the PPI. Let's go over that right now. As you can see, the PPI report that came out on Tuesday, it was much, much less than expected. 0.2 and a 0.0 on the core rate. This pretty much confirms what we saw last week with the CPI out of the US, where inflation has definitely come down quite a bit. This PPI is signaling that inflation may have peaked. Now, if we go to the UK, we can see on Wednesday, boy, inflation was hotter than expected. However, we go to Canada, and it was a little bit less than expected. So what we're seeing is some countries having a little bit higher than expected, the US having a little bit lower than expected. It definitely is not a clear picture yet. And then we had Fed Bullard say that, hey, we're not done hiking yet. So we saw commodities pull back, and we really saw the cryptos do nothing. The cryptos are just in a period now where I think everyone's scared to touch them. I think the selling is pretty much done for this round of panic from the FTX bankruptcy that was announced this week. However, at this point, we think there's a lot of confidence lost in crypto. And look, this is the same thing in the foreign currency world. When people lose confidence in a currency, it's very difficult to get that confidence back. Ankit, have you been reading about this FTX bankruptcy?
Oh yes, I mean this is just mind-boggling. I mean, we didn't know much in depth here, but it's crazy we can pull something like that in current times. And I've always said something about cryptos, like, all the money get poured in, but it's unregulated, so it doesn't come as a surprise to me. But getting to know all the details, it's definitely alarming. And considering how much money is actually in this crypto world tied up, it's mind-boggling. And I think, and I personally think this is not done yet. I think there's definitely more things to follow. And I think that's what we are seeing in the cryptos. We're not seeing cryptos rallying here. They're just consolidating. I personally think that this is just the start here. There's going to be a lot more of these blow-ups that we were likely to see in the coming weeks.
I will totally agree. I've been trading for now over 25 years, and I've now seen 3 bubbles. I saw the dot-com bubble, and I saw the real estate bubble in '07. And what happens is, and I'm going to give you one of my favorite quotes from Warren Buffett. He says, when the tide finally goes out, you finally get to see who isn't wearing any pants. So basically, when things are going great, people can do things poorly, and they don't pay the consequences. But when a recession comes, all of a sudden, all the people that weren't doing it right get exposed. And that's what happens in bubbles. People take excess risks, recession comes, and they're the ones without any pants. I agree, we're going to see more of these things, and probably not just in the crypto world. One last thing I did want to cover on the economic calendar, the Aussie employment report was fantastic on Wednesday night. So just a really good report out of Australia. Let's go in and take a look at the numbers of last week. Let's take a look at the charts. As you can see, it was a mixed week. S&P down 1%. The world index down 1.2%. Crypto up a little bit. Really, that was just from Litecoin pulling everything up. Litecoin has been the outperformer. Gold down and oil got smacked this week. If we look at the charts, I want to identify all the candles here this week. So here we have this week's candles. And you can see that every single day we had a gap down and a fall. We had a gap up and a fall. We had a gap down and a fall. We had a gap down and a rise. We had a gap up and a fall. This is really ugly price action for anyone who was trying to get a nice, consistent 2 or 3 day move. It just wasn't happening this week at all. Take a look, though, when you step back from the day to day, you can see this is just a high base. We are just high basing here off of this big rally. This is perfectly fine price action and frankly still looks quite bullish. We are holding this last little swing high here. Everything held this week. While it wasn't a great week, you can't say it was a terrible week. Let's take a look at the performance on an individual basis. As you can see, Litecoin was really the thing that held it up. Bitcoin and Ethereum pretty much flat for the week. We take a look at our foreign currencies. We liked the Kiwi this week, and it was the best performer. So the Kiwi did fantastic. And you can see that outside of that, it was a really strange week because nothing here makes sense. Pound up, they had a terrible CPI report. Pound is up. Aussie had a great employment report. It's flat. We have yen and Swiss francs selling off, even though it was a little bit of a down week on equities. These should have been a little bit higher. I'm looking at this price action and I'm saying this is a messy, messy week. What do you think, Ankit?
Absolutely. I mean, considering the moves that we have seen in the past 2 weeks, I mean, massive, those 2 to 3% moves that across the board. I mean, this week definitely did not make sense. And again, I think a lot of times that we are noticing in these markets is just not following that broader theme. And I think after the big moves that we have seen, we are just seeing this consolidation taking place, like the dollar and the yen. I mean, there's a lot of kind of unclarity here that we just don't know where things are going to go from here after those big moves that have taken place in the past couple of weeks. So I think a lot of this has to do with the dollar. I mean, dollar really backed off. And after that, I mean, since we saw the CPI, the dollar backed off. We haven't really seen things really catching traction here. So what we have here is a perfect example of the divergence that's taking place. For example, Aussie and Kiwi. I mean, look at that divergence there. We had the divergence that's taking place between euro versus franc. So I think that's really what the theme is here. But as far as the risk on versus risk off, there's not a whole lot of clarity. So this was definitely an odd week.
Yeah, totally agree. And that's what we're going to be focusing on this week. Is that a lot of times we have this macro tailwind. Imagine you're swimming with the current at your back. It's much easier. And so as these big forces come into the market and they push all the risk assets one way and all the risk off assets the other way, that's easier trading. Right now, we're not getting that. It's very, very confusing. There's lots of cross currents. So we really want to focus on just what Anka said. Let's find the correlated currencies that aren't acting all that correlated anymore. Euro, Swiss franc, Aussie, Kiwi, I think are great things to look at this. We've already taken a look at the S&P. Let's take a look at the VT, and you can see really the same thing. We've just high based up here. That's all we're seeing. It's just a high base. It's totally fine price action. Here's the cryptos, and we've talked about how after the big fall, they have been pinned. They're just pinned. They're not going down anymore, but they're really not going up. Until things change, I think you just got to stay away from these at the moment. This week, this is a holiday shortened week in equities. But remember, as currency traders, we get 2 days off a year. Christmas and New Year's. Those are the only 2 days the foreign exchange market is closed. U.S. Thanksgiving is not one of them. However, that being said, expect there to be much lower volumes really starting on Wednesday afternoon in the U.S. session and heading all the way into Friday. Typically, it's very, very light volume. There's not a lot of movement. There's really not great trading during those days. So we expect that the first 3 days of the week to be much better than the last 3. We do have RBNZ on Tuesday. So I think that is definitely worth watching. And we have loved the Kiwi long lately. The expectations are they're going to raise by 0.75%. We like that one still to the long side. Look, it might pull back a little bit off of the statement. I think you want to be a buyer in Kiwi off of that. And then on Wednesday, we do have the FOMC meeting minutes. Those will also be a mover. I think that is going to be the last opportunity for a news trade and really a good trade for the rest of the week. So to wrap up this week, we think you need to be active. Sunday, Monday, Tuesday, and into Wednesday afternoon, and that's about it. RBNZ on Tuesday night. Be ready for that one. Let's take a look at our currencies one by one. I'm going to go very quickly through cryptos like we have the last week or two. Bitcoin's at -2 but a 0. Bitcoin Cash, -2 but a 0. That's all we're getting here. -2s and zeros. -2s and zeros. Well, Ethereum -1. Let's take a look at the one that's surprising. Litecoin. Litecoin is above its moving averages. It is now broken out above its last little swing high. It is actually looking decent. I don't love cryptos here, but if someone had a gun to my head and said, hey, you got to buy one of the cryptos, I'd buy Litecoin. I think it looks the best out of all of them. It's the only one with a little bit of positive momentum. Let's do the same thing with Forex. Let's go one by one. Anka, what's your call on the dollar here?
Hey, Rob. Well, dollar, I'm torn between my outlook here because, I've really paid a close attention to the yields. And I think it's worked really well so far this year. But then here we are, just, that correlation is kind of broken here because, after the CPI release, yields have recovered half of its way through it. But then if you look at the dollar here, dollar has not. So the dollar is certainly showing more relative weakness to me here. But I think this is where it could be just consolidating, or it could be just, it's just going to make a way higher. It's just going to slowly catch up to it. I just don't know what's the case here. I think what we need to look for is breakout one way or the other. And I mean, right now we have a support in place, but we haven't really broken up to the upside. I would like this to at least go towards and test the moving averages. But I mean, right now, this week has been very muted with the dollar here. So I'm not sure how the next week is going to be with the holiday shortened week. But I think maybe dollar is just going to consolidate here until we start to get more data out of the U.S. and maybe you'll start to see more of the action here. But it's definitely not interesting here to me because it's kind of moving in two opposite directions with these yields.
And Anki, you've been tracking these yields so closely this year, and you've just nailed the correlation, and you've had some great insight on it. And right now, we've got the opposite things happening. We have yields going higher, but dollar going lower. So we've broken this correlation. And I think either one of two things have to happen. Either yields continue to go higher and it pulls the dollar up with it. Or if we get any relief on yields, so let's say the 10-year yield falls a little bit next week, I think that's a really good sign to be short dollar if we do get some relief on yields. What do you think if the bond yields come down in the US? What do you think about a dollar short?
Yeah, absolutely. I think one needs to catch up with the other. I think that's just the trade here. Right now, there's a big divergence here. So, like I said, one needs to catch up with the other. And at this point, I don't think yields will pull back. I think the Fed, again, personally speaking, I think the markets are fighting the Fed here. We have seen the same story play out throughout this year, and we have seen this, correlation kind of broken down. This is the first time that we have seen this big of a divergence, but we have seen this play out before, and eventually we've seen the dollar just bounce back and match with the markets here. I think the big trade really here until the next CPI is, okay, is the Fed is going to pivot? I think that's the big question here. But I personally think that the Fed is not really want to slow down. Fed doesn't want to see a rally, and as the market rallies, we see the monetary conditions start to loosen up, and that's just not what the Fed wants. So I personally think that market's getting ahead of itself, and as soon as the yields stay up, I think the dollar might just catch up with that. But again, that's just my outlook here. But I do agree that if the yields start to fall, I think then that would be, again, a good catalyst for dollar to be short here. But right now, it's too early to make a call.
It's a messy trade for sure. And I think there's easier, better trades to make. We are over here now to the yen, and this is not an easier, better trade to make. So let's take a look at this one real quick. You can see, look at these candles. Look at all these long upper and lower shadows. This means this thing's just been doing this. This plays havoc on stops. This plays absolute havoc. We went a little bit lower this week, but it was messy. So until we get any sort of movement here, I am just not interested at all in yen. I'm going to put that one on the shelf. Swiss franc, here we are right smack middle of the range. So look, if you wanted to do some range-bound trading and you say, okay, well, I think the Swiss franc just made a run from the bottom to the top and it's probably making a trip down to the bottom. Okay, I'll get behind that. So we've got a little bit of momentum to the downside. The problem is the trend score is basically telling you it's not going anywhere. So if you wanted to make a short-term short on a Swiss franc trade, okay, let's see if we can find something better than that. The euro has been going nowhere for a while. Let me point out again, all these long upper and lower shadows. Very, very frustrating trading for anyone trying to buy any sort of breakouts, breakdowns. It's frustrating. So whenever something's doing this, we said this last week, ignore it. Just take it off your screen and we'll come back when it does something. We said the same thing about the pound last week. Now we can see the pound is starting to show a little bit signs of life. We identified this little range here. We said until it breaks out of this range, we're not interested. Here we are a little bit above the range. I could get behind someone saying, hey, you know what, Rob, I want to be long pound. Okay, this is the first time in a couple of weeks that I would agree with them. Hey, things are starting to look like they could make a run all the way up to this last swing high and potentially break out. So the pound is a decent trade on the long side. Question is it the best trade on the long side? When we're looking for the worst trade out there or the best short, CAD definitely fits the bill. We have said that the CAD doesn't do anything for months. I mean, Anka, what has it been since like August where we've even been interested in the CAD?
I think we have to go back further. I think June and July, like this consolidation has been one of the longest. Like since June and July, this hasn't gone anywhere. So yeah, pretty uninteresting trade. And again, we talked about it's really tied up to the dollar, and I think that's just really the correlation is not that great. I mean, we haven't seen the CAD trade like a growth currency, like how we have seen with the Aussie and the Kiwi here. So pretty uninteresting here. But again, we'll see. We'll see if this start to deviate from the dollar. I think then maybe there's a good trade against the dollar. But so far, it's been almost like trading the dollar.
I'm actually quite interested in a CAD short here. As I've said, I haven't even looked at CAD for months. And for the first time, it has broken out of a channel. Now, look, you bring up a point. Is this simply just correlated with the dollar? Well, not really, because the dollar was flat last week, actually slightly up a little bit, and the CAD was down. So it's showing me that the CAD is relatively more weak than the dollar, which is now a new thing. I like CAD short quite a bit. So I'm looking number one for CAD short. Aussie here, it's messy here. We're between the two moving averages. When it's between the two 50 and 20-day moving averages, I just say it's a zero. I'm not interested. The Kiwi was our favorite currency last week, and it is our favorite currency this week. We've got nothing but bullish price action here. We've got bullish price action on the shorter term chart. We've got it on the longer term chart. Everything looks good here on Kiwi. So if we were to take a look at what do we like the best? Well, Kiwi is our favorite. Kiwi's our favorite. And what's our favorite short? CAD. Dollar, I think you've got to really watch for the bond yields before you take any sort of short on that dollar. Make sure that those are breaking down. As far as the velocity score goes, so the trend score is kind of a longer term viewpoint. The velocity score is what's happening right here, right now. I think it's a fairly easy trade here. Pound, Kiwi are showing the most relative strength right here, right now. And on the short side, Aussie and Swiss franc. I'm also going to take a look at the CAD on the short side as well. So let's go ahead and pair some of these things together, and let's take a look at some actual prices. Last week on our currency room, we talked about two trades. We talked about Kiwi versus the Swiss franc and Kiwi versus the yen. They were both really good trades on that week. This here is the daily chart. As you can see here, Kiwi Swiss franc, we reached this swing high off this really nice rally that we had all through October. We came back, we pulled back, and here we are. We have to ask the question, is this a base or is this a bull pullback? Now, the difference between the two is a base means it's going to go sideways for more time and then break out higher. And if it's a bull pullback, this time it's going to break out. We hit this level of resistance this week and we pulled down off of it. And so at the time being, we can't say that this is a bear rally. Sorry, I mean a bull pullback, because it has not broken this resistance point. All I'm waiting for is it to break this resistance point. So I'm going to put out some alerts here at 59, basically. 59 is the moment, and I think this is where you want to be long. And then, of course, based on your time frame, you're going to choose a stop somewhere along the way. But once it breaks out of this 59 clearly, then all of a sudden now we're saying, okay, well, where is the next stop? Where is the next point? And I think you got to get out some trend lines and say, you know what, the next point is possibly up here to, maybe 60, 70, 60, 50, 61, somewhere up in here is where we're likely going to go to. So this is my favorite trade of the week, Kiwi Swiss franc. I think you can also, I'll take a look at Kiwi CAD as well. And I know Anka will want to take a look at like Aussie Kiwi. As you can see, this is a lot of bullishness right now. Just a lot of bullishness. This time we did have a bull pullback, so we broke out of this area. So now we know that this is truly what it is. It is a bull pullback. At this point, we've probably reached a little swing high. A pullback to this 82 area, this is where you want to start to look to be a buyer. Make sure it's bouncing off this level, but I think you want to start looking to be a buyer on Kiwi CAD somewhere around the 82 area. What pairs do you want to take a look at, Ankit?
Yeah, Rob, you're right on about the Aussie Kiwi. I think that's a one pair to really pay attention to, because this is just capturing that relative strength and weakness. I mean, look at that, like velocity. I mean, look at the RSI. Like this has been just a one-way trade with not a whole lot of bounce. So if you look at the daily chart, I think daily chart where we come off from that 113 down to 109, and we have kind of consolidated a little bit here. And after that, now you can see that very little consolidation, a little bear rally, and we actually broken down. So I think at this point, if you really start to draw some lines here, I mean, this is a trade. I mean, if you really, Rob, zoom out, this trade has been working out since last November. I mean, 2022, you can see like this is a rally that has been in there since last November. So, it definitely has a lot more room for this to come down if it start to catch to the previous levels. But I think at this point, this is a very clear signal that, if you want to be short in the markets, go with the Aussie. If you want to be long something, go with the Kiwi. And this is a correlation that hasn't worked as much on this side until now. So I think from now until like maybe next couple of weeks when the volatility is low, I think I like this one. Maybe some bases, not a whole lot of bounce, but any sort of base that we can find for the break of that. I think that will be the trade that I am looking for into this week. Outside of that, again, very small little bases here. So I think after a move like this, we'll probably see some consolidation, but I still like further this to the downside. And again, Aussie more to the downside than to the upside. I think Aussie looks kind of awful here compared to, compared to the Kiwi and the other currencies. Rob, Kiwi, again, we can look at the same thing. The euro against the Kiwi and or euro against other currencies. But I mean, overall, I think that's the one pair that kind of looks the best to me. There's another one, Rob, if you want to pull up. I just want to kind of point out Canadian dollar basket, if you can pull that out, and then change the template to the moving averages. I just want to show where we are with the CAD and how critical point the CAD is currently at. So if we just go not only on a daily chart, but weekly chart, I want to show where we are on the weekly chart in the CAD. And if you go on the weekly chart, we are right at the moving average there, the 50-day moving average. So if we go back in time, all last year, we did not break that 50-day moving average. And I think this is a very critical support area. I mean, we can see that the CAD is finding some support over here off the 50-day moving average. I think this is a critical point. If this can give that 50-day moving average, I think then there's a lot more downside in the CAD. But I think just going back in time, I mean, this area has been where the bounces come. So the question is, can CAD bounce us off from here, or can the CAD just, kind of roll off from there? Because if it does, there's a lot more correction to be had in the Canadian dollar. So I think it's at a critical point. I think you should take a look at both CAD on the worst case scenario and the best case scenario. And I think we will see something happening shortly in the next couple of weeks. And Rob, if you want to pull up dollar CAD, I think you were right on with that relative strength and weakness. This week, dollar was actually stronger than the CAD. I mean, you can see how nicely it's bouncing on a daily chart off that little support here. I mean, nothing else has really broken out of the support, out of that little small consolidation area. This is the only pair that's actually making a run, which is kind of opposite of what we've seen so far this year, where, we have seen better movements in the Aussie dollar on the short side, or Kiwi dollar on the short side, going long the dollar. I think this is the first time that I'm actually starting to like pairs that against the CAD as well. So I think at this point, we want to keep our options open. It looks like we are seeing some changes in some trends. We just need to make sure that we're staying on the right side of the trend. So that's my outlook, Rob.
Thanks, Anka. You always do such a great job of looking at the big picture and some of the longer term stuff. Because, I mean, even this, I'm like, wow, I didn't know the CAD was at that critical of a point. I was taking a look at shorter term charts and thinking, hey, I really like how this is acting now. But now I see it on the longer term is telling me, hey, I like this even better if we can break below that 50-day moving average or the 50-week moving average on a weekly chart. Well, let's wrap this up. It is a Thanksgiving week in the U.S., so remember, expect volatility and volumes to drop off starting Wednesday afternoon in the U.S. And you're just going to see less movement. You're going to see a little bit of a pickup on Friday as the markets are open for a half day. But after that, really not much at all this week. We like the first 3 days of this week, and then really just everyone chill out and have a great little holiday. Even if you're not in the U.S., celebrate it anyway, like the Canadians do. As always, follow relative strength and weakness, and watch out for Kiwi on Tuesday night. There should be a big move off the RBNZ movement. Be cautious on that. We like second stage entries, let the washout happen, and then take positions after that. That is the currency room for this week. A reminder, we are on holiday this week at Maverick, so this means there will be no end-of-day videos, no live sessions at all. We will be back that first week of December. Goodbye, everybody.